If you're a W-2 earner making $300,000 a year, there's a legal way to keep $20,000 to $50,000 more each year without quitting your job. And that is to start a simple side business, and everyday costs can move to pre-tax, like your laptop, phone, software, travel, even parts of your home. At Tax Saving Experts, we've implemented this exact strategy for high-income W-2 earners and business owners over the last 12 months, helping 270 clients save $12 million in taxes. For most of them, the first domino was launching a clean, legitimate business next to their job. The exact same salary, but after doing this, there's now a better structure. And overall, you're paying less tax. Here's the plan I'm going to walk you through so you can do the same and save an extra $20,000 to $50,000 in the next 12 months. We'll cover why a side business flips the tax math, what counts as a real business so deductions actually stick, the best and easiest write-offs. I'll then walk you through how this exact strategy helped one of our clients, Dan, lower his taxable income by over $35,000. Let's start with the switch that changes everything. W-2 earners pay for things with money that's already been taxed. Business owners pay for business things before the money gets taxed. That difference lives in one rule, Section 162 of the tax code. It allows ordinary and necessary expenses to run any trade or business. So when you add a real profit-seeking business next to your job, you step into that rule. No storefront is required, no employees are required, just a real business with a believable story. And that leads to the next question. What actually looks real to the IRS? The IRS is not looking for perfection. It's looking for signals that match a believable story. Signal number one is a profit motive, meaning you're trying to make money on purpose. You have an offer, you have a price, a path to acquire customers. Signal number two is continuity. You can't treat your business as a one-weekend hobby. You need to show up monthly, have consistency. You need to actually market, deliver, and improve your product or service. And signal number three is going to be your records. You need to have a separate bank account, basic books, invoices, receipts, and notes that actually match what you say you're doing. So what does this look like for a high-income W-2 earner? Well, the sky's the limit. It could be consulting or contracting in your field, content courses or expert workshops, coaching in a niche you already know and are good at, product reselling, selling e-commerce, short-term rental operations you can actually run, affiliate or media, newsletter sponsorships, board level or expert advising. The list will continue on. Now, let's set you up the right way so those deductions actually stick. Start with one single member LLC in your state, grab an EIN number, and open a business checking account plus a business credit card. Turn on simple bookkeeping and close the books every single month. Keep a physical digital folder for receipts and drop PDFs or photos as you go throughout the days and weeks. Add an accountable plan so your company can reimburse your pre-tax, home office, internet, phone, mileage, different gear and tools, and back this with your receipts and simple data logs. When you hire help, do it cleanly. Collect W-9 forms, issue 1099 NECs when required. So your foundation is now set. LLC, banking, books, and an accountable plan. Before we dive into the specific write-offs, quick pause for the people who want help implementing this the right way the first time. If you're a high-earning W-2 employee and you want the exact strategies with my team walking you through each step so you can lower your taxes, keep more of what you earn, and build long-term wealth, tap the top link in the description to book a call with my team. In the last 12 months, we've helped 270 high-earning W-2 employees and business owners legally save over $12 million in taxes. And if you want to be our next case study, this is where it all starts. So make sure you click the link down below, book a call. All right, back to it. With your structure in place, let's put it to work and move everyday costs into the pre-tax lane, starting with the one you already pay every single month, your home. If you use a space exclusively and regularly for business, it can qualify as a home office. Choose the simplified method, per square foot formula for speed, or the actual expense method to capture your true business percentage of your rent, mortgage interest, utilities, insurance, necessary repairs. Whichever path you pick, document it once and keep it on file. Take 2 clear photos of the workspace. Sketch or note the dimensions. Jot the square footage and drop it into your home office subfolder. If you're already hosting real business meetings at home, with the right paperwork, your company can rent the space for limited use under the Augusta rule framework, creating a deduction for the company, and when structured correctly, it produces tax-free income for you. Keep track of basic meeting minutes. Use a short rental agreement. Save a few quick market rate check comparables based on what a similar space would cost for a day. Do those 3 things and you're all covered. Your home now pulls double duty, a place to live and a compliant engine for pre-tax savings. And now that your workspace is working for you, let's put wheels on that plan. Commuting is not deductible. Business driving is. So if you're heading to client meetings, site visits, supply runs, location shoots, that mileage will count. For the year, choose one method and stick to it. Most of the time, I recommend going with a standard standard mileage as it's the quickest, easiest, or you can use actual expenses. That's your gas, insurance, maintenance, lease, depreciation. Whichever method you pick, the deduction lives or dies by your logs. So you need 4 things. Every trip has a date, the purpose, start miles, and your stop miles. Jot it down the same day on either the Notes app, a spreadsheet, or your mileage app. No log means no deductions. So make sure you keep track of all of this. And if your business use is over 50% for a qualifying vehicle, you may be able to unlock accelerated write-offs under the current rules. We'll let your CPA confirm it's a good fit, but it all begins with clean records. So now your space is dialed in, your wheels are documented, and both have moved to a pre-tax lane. Let's power the work itself. Phone, internet, gear, software. Start by assigning a reasonable business percentage of your phone and internet. Reimburse that amount through your accountable plan so it's pre-tax and it's documented. Next, deduct the tools that actually run the business. Your laptop, camera, lights, microphone, and the software stack. Editing the suite, CRMs, project management, analytics, AI tools, etc. Remember, anything ordinary and necessary to your business. Save every invoice and subscription receipt that you get. Larger purchases may be expensed immediately and or capitalized and depreciated over time. With your equipment tool set and your documentation tight, you're ready to take meetings and move. So let's cover meals and travel the right way. Meals are simple when you follow 2 rules. There must be a business purpose and a business contact. That could be a client, a partner, prospect, an employee. As soon as you pay, write who and why on the receipt in your app. In most cases, meals are 50% deductible. Travel must be primarily for business. Think events, filming, client work, due diligence, property management, or your annual strategy meeting. Tie each expense to that purpose in your notes, and you can deduct airfare, lodging, local transportation, baggage fees, reasonable meals. Your family can also come along, but their costs are personal. Unless they're bona fide employees traveling for business with duties, then you can capture your family's deductions as well. At this point, you've lowered the cost of communicating, moving, meeting. Now let's protect your health, support your family, build skills, tax efficiently. If you're on a high deductible health plan, open an HSA. It's the only account with triple win, pre-tax in, tax-free growth, and tax-free withdrawals for qualified medical expenses. Treat it like a stealth investment account. Invest the balance, save your receipts in a single folder, reimburse yourself years later, completely tax-free. That's how you turn inevitable medical costs into a long-term advantage. Now family, if your kids can do real work in the business, a studio setup, editing, films, packaging, administrative work, cleaning the office, put them on payroll at fair market rates. Keep timesheets, task lists, and the finished work on file. Wages are deductible to the company and often taxed at a much lower bracket to the kids. And if the child or elder care is a reality, a properly drafted dependent care assistance plan can reimburse eligible costs within annual limits, turning unavoidable expenses into tax efficient ones. And here's how education ties it all together. If a course, conference, certification, or book maintains or improves skills that you already use in your business, it belongs on the business, not your personal card. You can even adopt a simple educational assistant plan for employees, family, employees included, within the allowed limits. Stack these quiet wins, you'll feel the difference by quarter end, not just during tax season. And many people have seen this exact strategy where they can save an extra $20,000 to $50,000 a year, but only very few are actually taking action. I want you to see how this looks in real life with one of our clients who followed this strategy using mine and my team's help at Tax Saving Experts. So our client Dan, he's a dentist earning about $350,000 a year as a W-2 employee. Nights and weekends, he launches a small consulting LLC, clears about $60,000 in profit in his first year. We set a documented home office at about 10% of his home's square feet. Using actuals that produced about $4,800 in deductions. We allocated a reasonable business shares of the phone and internet of $1,800. He upgraded his tools, his laptop, mic, camera, software for about $3,500, kept every invoice. He drove about 4,000 miles to clients and shoots, which came to roughly about $2,500 at the standard mileage rate. Meals tied to real meetings added $1,200, each receipt labeled who and why. A niche conference and a client on site created another $2,200 travel deduction, fully supported by the agenda and the calendar trail. On healthcare, Dan's family HSA contribution landed around $8,300. He invested it, saved every medical receipt in one PDF, left the cash to grow tax-free. He hired his teenage son for real studio and editing tasks, $10,000 a year, a fair market pay rate, weekly timesheets, and finished files stored in the drive. To stay educated and sharpen his niche, Dan booked $2,000 of courses that directly improved the work he sells. So what changed? Those dollars shifted from after tax to pre-tax. The accountable plan reimbursed cleanly. The business paid for tools, equipment, travel, and training before the IRS took their cut. Again, this is is the exact same income, but due to the better structure, Dan paid a lot less in tax. Now, because I truly want you to win and save more of your hard-earned money, follow this 7-day step-by-step plan to actually put everything I've taught in this video to work. So today, choose your lane and write one clear sentence on how you'll earn your first dollar. Form a single member LLC, get your EIN number, open a business checking account, and you can even add a business credit card if it's offered. Tomorrow, I want you to draft a simple accountable plan. Take 2 photos of your home office, note its square footage, and start your mileage log with your first business trip. Day number 3, list your monthly bills, your phone, internet, business, softwares being used. Set reasonable business percentages. Submit your first reimbursement to yourself with receipts attached. Day number 4, aim to book one call with a potential client, block 60 minutes to finalize your offer, price, and the deliverables. Day 5, install a receipt scanner app, write a 2-line travel expense policy that you actually follow through on. Day number 6, if you qualify, open your HSA, schedule contributions. And finally, day number 7, write the name of your first client or project on a sticky note, put it on your monitor, you're in motion, and your motion's going to keep compounding. Now you've got your first week mapped out, the gears are turning, the structure's live, and your next dollar has a smarter path. Here's your next step. If you're a W-2 earner making over $300,000 a year and you want to protect your money, lower your taxes, use legal strategies to build long-term wealth, tap the top link in the description, book a call with my team. In the last year, we helped over 270 high-earning W-2 professionals and business owners save over $12 million in taxes. So if you want to be our next case study, this is where it all starts. If you'd rather keep learning first, watch the next video on the screen. 4 types of taxpayers that overpay without knowing it. It pairs perfectly with this video and shows the 4 types of high-income earning W-2 employees who overpay in taxes without even knowing it, and the simple fixes which can be made to instantly lower taxes and keep more of what you earn. And remember this, take action because your income should build your wealth, not just fund the IRS.